www.marketstrategy.com.
Hi, this is Chris again, looking at the upcoming Thursday, July 24th trading session. And as you can see, right away in Asia, we have a couple of announcements that could possibly move the markets. We have the manufacturing PMI coming out of Tokyo, previously at 51.5, and we have the HSBC, China Manufacturing PMI. And you have to keep in mind that the HSBC private version actually will quite often move the markets more than the official government numbers, simply because the government numbers aren't necessarily trusted. We are looking for 51. 50.7 was the previous number. 51 would, of course, continue to perhaps suggest expansion in China. Anything below 50 will throw the markets into a bit of a concern as far as risk appetite is concerned, because the markets, of course, are very sensitive to Asian numbers, as weakening Chinese economy suggests weakening global economy. Looking at Europe, we really start fairly light. We do get to composite PMI in Germany, which of course it is a medium type of announcement, expected at 53.8. Previously it was 54. Not really, there's like the services PMI, not really enough to really get the markets moving, I think, on their own. What you need to look at is the totality of these announcements, and if they are all poor, then that is a completely different situation. This is one of those times where you won't necessarily look at any specific number for direction, just the totality, the actual feeling of the markets as a general rule may be affected by this. Looking forward, as we kind of flow through the day, we've got some reasonable numbers out of the UK that could move the markets. We have the retail sales year over year out of London at 4.6 is expected. 4.7 was last reported. You have continuing claim, initial jobless claims out of the United States. Now that can move the market because it suggests what the non-farm payroll numbers could be here in the first week of August. It just kind of gives you an idea of how things may be progressing in the employment market in the United States. A bad miss there a lot of times is negative for the stock markets in the U.S., so of course would affect the S&P and the Dow, etc. Natural gas storage, of course, is very important to natural gas in and of itself. Really doesn't have an effect beyond that. By far, the most important announcement would be the Japanese CPI, which of course will have an effect on the Nikkei and the yen, and could kind of influence the move into the Friday session, as it would show a good snapshot of inflation or lack of in Asia. Remember, the Japanese have had a lack of inflation for some time, so therefore it actually would be beneficial, quite frankly, if the market continued to think that the Bank of Japan was going to continue to work against the yen, which it really should. So in a way that somewhat negates this number, unless of course we see climbing CPI, and that would suggest that loosening monetary policies are not working, and that would be very bad. That would be very risk averse. So looking forward during the day, probably the Japanese CPI and perhaps the initial claims in the U.S. labor markets are probably the two that we need to pay attention to the most. Looking at the euro dollar, you can see that we continued to fall during the session on Wednesday, but kept a fairly tight range, so really it does not look like we're ready to fall apart. It's probably going to be a grind down to the 1.33 level. Any bounce from here will more than likely have to contend with 1.35, which was previously support. Should now be resistive, so a resistive candle up there probably sends this pair back down. Of course, a break to the fresh and new low will as well. Looking at the dollar-yen pair, you can see that we initially fell and then rose during the session on Wednesday. Quite frankly, the dollar-yen could be interesting based upon the CPI numbers. However, I don't see anything that's going to get us out of the larger consolidation between 101 and 103. And since we're closer to 103, quite frankly, it's probably a buy on the dips type of situation. Looking at the S&P 500, you can see that we had a fairly neutral day during the session. We gapped a little higher on Wednesday and basically stayed there. 1990 offered a little bit of a resistance ceiling, if you will. We think that pullbacks will just invite more and more buying before we eventually break out above 2000. So this is a buy on the dips market still. We're still well within the uptrending channel, and quite frankly, nothing has changed. And that has been a look at the July 24 trading session.